All right, good morning. We are back and hopefully everything is working. Hopefully, everything is working. So, new year, new account, new challenge. But hopefully the same outcomes as the last few months, which has been nice, consistent, profitable trading. Now, at the end of last year, I tried to stream with 3 screens and the stream kept crashing. Now, given I've got a lot to think about this morning, or as it is, I'm just going to trade with 2 screens, which means trying to switch between the screen you're seeing here and my actual FTMO trading account, where I'll actually be executing the trades, will be a bit clunky and a bit delayed. But I can't be bothered to deal with that. So I'll try and fix that later in the week. But for today, we're just going to have to deal with it. So I might say that I'm making a trade, but you might not actually see it because I won't be trading on the screen that you're seeing. I'll be trading through FTMO, but that's fine. That's fine. I'll switch screens as soon as I am able to. So the market's opening at a very interesting level, actually. So we're actually opening right at December's high, which was the previous trading day, the final trading day in December, which was here. Now, over Christmas, I've done a fair bit of work in terms of reviewing my trades from last year, or at least the last couple of months of the year. And the number one thing I need to focus on at the start of this year is figuring out why I trade well on certain days and not on other days. And I mean, I think I figured it out. So you'll see these green graphs here. This is called a volume profile, which is essentially showing you where there's lots of orders being placed and where there aren't lots of orders being placed. It's far too complicated for me to explain in just a couple of minutes. But my trading decisions will be based on where the price is relative to these volume profiles. I'll try and explain it bit by bit as we go. But I will probably be talking quite a lot about volume, about value areas, and that sort of thing. That is based off of everything I've done over Christmas. I've done quite a lot of work there. So yeah, we are opening up at the highs. It's going to be interesting to see if we can push higher. All-time highs are now within our sights. The all-time high is 24,777. So we're at only 100 points off of all-time highs. That all-time high was made back in early October. We didn't stay there for very long. We were there for I think a few hours, and then it very, very quickly sold off. If we do make any trades today, I've also got to try and get used to trading on this new platform, which I've only traded with once, and it was just a little practice. So that's an added little tricky thing today. I mean, it won't take as long to get used to it, but I would imagine there'll be a couple of issues this week in terms of me maybe pressing the wrong button at the wrong time. But we'll just deal with that as it happens. So in terms of our actual trading plan today, we're currently trading above the overnight range. I want to generally, I'm not going to say always, I will generally not trade in the first 15 minutes of the market opening because I want us to just let the price develop a little bit. There's just so much volatility and not much direction in those first 15 minutes. I want to see what levels the market can hold or not hold, and then I'll be able to base my plan off of that. So what I'm doing with this challenge is I'm trying to get a funded account through FTMO, which is one of the world's biggest, maybe the world's biggest prop firm. So I need to grow this is a demo account, so I'm not trading any real funds until I pass the challenge. And I'm looking for 15% growth of this account in order to actually get a real live funded account, which would be £70,000. So it's 15% growth with no more than a 4% daily drawdown and no more than a 10% net drawdown. So we'll be risking 1% of the account per trade at the absolute most. So that'd be £700 risk per trade. And that's another element that I need to deal with this year, is that increased risk. Even though I'm not trading real money yet, I need to be trading as if it is real money. And making and losing £700 or more in a matter of moments is, something that any trader has to get used to. I would rather this challenge take a little bit longer than necessary and err on the side of caution. Certainly these first few days back, I haven't traded now for over 2 weeks. So I'd like to be relatively cautious with my approach, very patient, and try and just get off to a slow and steady start. I have there's no time constraints on this challenge, so it might take as little as a month. It might take 3-4 months. I'm really not going to put any time related goals on doing this. It's just going to be focusing on just following my system and then collecting the data from those trades. Data collection is going to be my primary focus this year. And we'll go through that later. I'll show you the spreadsheet that I've got set up to really collect a lot more and get a lot more insight than I did last year. It was impossible really to collect data last year because I was constantly changing and developing my strategy. That's another major change. Last year was very much all about learning, with the actual outcomes being far less important than just the process of learning. But this year I want to flip that and actually now just focus on the outcomes, which requires just consistent execution of the same system, not chopping and changing, because every time you change part of your strategy, you're essentially changing the win rate or changing the risk reward, which sort of renders your previous trading data no longer relevant. So I want to keep it as stable as possible and ideally have an entire year of trading the same method. So what we've got here in the market is the market has tried to push above the prior high. It failed to do that as expected so early off the open, and we're now coming down and we're testing what's called the value area high of the overnight, of the Asian session, essentially. So you'll see, might be a little bit tricky to see it, but we've got three horizontal lines. We've got a dotted line here, a thick line here, and a dotted line there. That is within the two dotted lines is called the value area, which is where 70% of the volume took place overnight. So then the dotted line at the top is called the value area high. So it's essentially the highest price that the market agrees is fair value. And then the thick line is called the point of control, which is the level where the most volume was transacted. And then we have the value area low. These levels often act as key levels where there's buy orders or sell orders. And you can see here that the market is what you may call either accumulating or consolidating at this value area high. Now, consolidation at the value area high is quite a bullish signal because it's, accepting these higher prices. And if the same was happening at the bottom, it may be a more bearish signal. These don't give you absolute certainty over anything, but it gives you a lot more idea over where the orders are and why the market is moving to and from certain levels. And it's something that I was aware of last year, but not that focused on. And I want to put a lot more of my trading decisions. I want to base a lot more of my trading decisions on these volume profiles. I'm also going to be taking a lot of note of the previous day's volume profile, the previous session, because these often act as very key levels. We're sat significantly higher currently. Which is, very bullish as well. So the close of this 1 minute bar here may have been a good entry. I didn't enter as I'm not planning on trading in the first 15 minutes this morning. I want to just sort of ease my way back into trading. But you see here this consolidation at the value area high and then follow throughout. And these are the sorts of trades that if these set up later on in the session, I'll be taking them. And in future sessions, I would take this trade. Now, without this volume profile, you would not have any insight as to why the market came down to test these levels. And through some quite extensive back testing and looking back at these last couple of months of trading, had I used the volume profile, it would have really helped. It would have really helped. I feel like I have a lot more understanding now of where the market is going and why. I feel the price action itself, the candles, is just not sufficient. So we've got a clear breakout here of the highs. Now, this is where the idea of our breakout retest comes in. So we break a key level, we come down to retest, and then we want to trade the follow through. So at some point here, we're going to get a retracement. It may be in the next few minutes. It might not be for half an hour. But that's looking like the way we're going to go today, looking like a long session. It's looking like a case of just timing our entry properly. I think, down here, this test of the value area, this is the sort of trade I'm going to be really looking for on a daily basis. These are the trades that can have really high risk reward. I'll try and find some examples later on from the last month. But this sort of thing of the market testing either the overnight value area or the previous day's value area before really moving and choosing direction, as that's going to be maybe our most common and popular setup of these next few months. Because rather than what we've been doing, which is waiting for a breakout of this high and then a retest and then going, which is still, may well happen today, may well be a good trade. Having the volume profiles allows you to enter much earlier. So rather than having to wait for all of this move first to then get a retracement to then be long, you can get in on this first initial move, which is where there's the biggest opportunity for risk reward. So I'm really excited about this, because I think pairing order flow, which is the volume analysis, with the break and retest strategy that I've implemented so well in this last 3 months, I think pairing the two together could be really, really good. The thing is, almost any strategy can be profitable if you implement it consistently and if you implement it confidently. It's just about finding something that really works, but really works for you and for your own psychology. Through all the back testing I've done over the last few weeks, these opportunities are really obvious to me. I really see them clearly. Whereas previously, when I've looked at other things, they've clearly worked for other people, but they've not really clicked with me. So we've had our first mini retracement there, and you could argue that maybe this is now where we want to be long, but this level that the market's tested is nothing of any significance. I want to see a deeper retracement before jumping on board. And again, that's where our volume profile is going to come into play. So we want it to test at the very least this value area high of the session. But really, we're looking at this previous high. We want this area is our area of interest now. We want to see the market come down here. We want to see what the market does once it gets down here. If it reacts aggressively and looks to follow back higher, then that's where we're going to jump in. Also need to be aware that the all-time high is at 24,777, which is the all-time high is always a very significant price level. Maybe acting as a bit of a magnet today. And given how close we are to all-time highs, it might mean that we don't get any sort of meaningful retracement until we've hit that. But if that's the case, then so be it. We're not going to be chasing these trades. So already we are about to touch the all-time high. This has been a very active session so far. There's a lot of volatility going on, which is a good thing to see. Oh yeah, it would have been nice, sure, if we'd have got in down here, but I made a choice this morning. Actually, yesterday, I decided I'm not going to trade the first 15 minutes at least. I'm just going to watch the market, having not traded for the last 2.5 weeks. But if you're watching this morning, then try and remember this setup of a test of the overnight value area before a continuation, because that's the trade that we're going to be looking for on a very, very regular basis. And that could be to the long side, it could be to the short side, it could be the overnight value area, or it could be the previous day value area. But that concept, that idea, is what we're going to be looking for very, very regularly. And it's a trade, it's a setup that I've never traded before, but it really follows the same idea of the break and retest. It's just, for me, it's something that sets up more often and just makes a lot of sense. So here looks like our first meaningful retracement of the day. First one. Now, if the market can come down here, that's our sort of, I guess, A plus setup. But we will see, and we'll be patient. Okay, I am in a long position. I'm not going to change screens, but I will, after the trade, be able to go back and show you exactly where the entries and exits are. I want to just manage this trade closely. But I am long, and I'm currently about 10 points in profit. Okay, I've closed half of the position. And stop loss has now been moved to break even. Now, again, I apologize for you not being able to see this, and I will get better at this. But for the moment, I want to be able to just put complete focus into this. I've now closed 3/4 of the position. With the remaining quarter at break even. So it's a good start, a profitable start. It's not. I don't think it's going to be an enormous trade to start us off, but it's going to be a winning trade. It's already been a winning trade, and that's nice. That was very quick, decisive decision making. And as soon as this trade has been closed fully, I will switch screens and show you exactly what's gone on. And in future sessions, I will be switching screens so you actually see me executing the trades. It's just that's my first actual trade on this platform, and I really wanted to make sure I didn't mess it up because it is completely different. Completely different. Okay, and we've closed the rest of the position. So that was a total profit of £475. So it's not a. Now again, that might sound incredible, but I risked about £600 there. So it's not. It's an okay trade. It's a good trade in terms of execution. It's the risk reward. That's nothing special because we want generally to try and find that 1-to-1 risk reward or better. So yeah, let me switch screens and then we will just go through what actually happened there. One moment. Just need to remember how to do this. Okay, now hopefully you can see what's called MetaTrader 5, which is the platform that I get through FTMO. In the bottom left here where my cursor is, you can see the account balance, 70,475. Started this morning at 70,000. Now, I don't currently know how this works, but I know that we can go through our entire sort of history of FTMO tracks all my trading history and everything like that, and we get quite a lot of statistics from it. I've never placed a trade on here before, and I believe it takes a little bit of time to come through, so I don't think I can instantly just see exactly. I can't take you through the detailed statistics yet. I think I need to close this platform and then open up my analytics page, which again I need to look into this, but it doesn't really matter for the purposes of this morning. That's £475 profit. But yeah, this is what I'm seeing. So when I'm actually trading, this is what I'm seeing. This is where I place the orders. So I traded 30 contracts there. So yeah, this was a good trade. I'm going to go back. Actually, I'm going to go back. Okay. So this was a solid trade, a very solid trade. This was the breakout retest. So I'll go through exactly where I entered and why. So we had this was our first sell-off of the morning, first retracement, I entered on the close of this 1 minute bar. So I entered here. I'll draw a line. So this was my entry. I took half profits here at the highs, and then I took remaining profit here once it made a double top. Now this is a great trade, and there's nothing really to say about this besides it's a good trade. But you can see now maybe why this first trade of this morning, which we didn't take, but we will be taking in future, is potentially such a huge deal. Because, you know, to get this small scalp, which was a good scalp, but to get it, I've had to allow the market to make the big move. You know, this is the big move of the morning, probably. I doubt there's going to be another move, at least to the long side. There's probably not going to be another move of this magnitude. I mean, there might be, but, you know, low probability of that happening. We've just made an all-time high, by the way. Finally made an all-time high. But yeah, you can see why, you know, using the volume profile, seeing that this was the value area high of the overnight, and then trading this is where, you know, it's not going to be as frequent, it's not going to be as often as these small break and retest scalps, which I traded last year and I've traded this morning. But when they do set up, they offer big risk reward, because it allows you to actually capture that first big move rather than having to watch the first big move unfold. So market is now trading at all-time highs. The previous all-time high was here, 24,777. I don't want to be executing any trades right now while the market is at these all-time highs. I really want it to figure out what it wants to do. Is this going to be some sort of hard double top and we're going to sell back off? You know, that's quite a common thing. Or are we going to blast straight through it? But whatever happens, I want to stay away and let the market figure out what's going on. So now we're a little way into the session, I'd like to draw the volume profile from the start of the uptrend through to the current high of the session. So this is what we've now got. This is the volume profile of the present session, where we've got our value area low being down here. This is why I entered where I did, because this was a test of the value area low. So, you know, I think we're quite likely to come back down here and test, and it'll be interesting to see then if the market continues higher again or if it pushes lower. We may now just be entering a trading range for the morning, and if we do, then we'll be done. But yeah, this volume profile has been quite transformative to my understanding of why things are happening at certain price levels. You know, and nothing in trading is ever certain, ever. But it's, you know, I now understand why price moves when it does, because it's all to do with it's called auction market theory. So it's that the stock market is just one big auction. You know, it's one big auction between buyers and sellers, and it's this constant tussle to try and figure out what the fair value is of that asset at that moment. So the POC, the point of control, which is the white line here, is essentially where the market is agreeing there is the most fair value. And the dotted lines are the upper and lower bounds of where that value is, and then anything above or below is either, you know, expensive or it's cheap, essentially. What we've got this morning is what's called a P-shaped volume profile, meaning it's extremely bullish because all the volume is at the highs. So this volume profile essentially makes the shape of a P. If it was bearish, it would be a B shape, so all the volume would be at the bottom. And that's, there's many different shapes of volume profiles which indicate different levels of bullishness or bearishness or indecision, trends or ranges, or various different things. But the key thing today was that key thing to take is that this trade was based off of both volume and price action, not just volume and not just price. And that's a significant thing. That's a very significant thing. So are we going to make any more trades today? The only setup that I'm now interested in, the two setups I'm interested in, is a retest of this initial high of the morning, and if we break out to new highs. Because if we can break to new highs and then hold this level being the previous, that could be a very good indication that we are going to move higher today. But either way, there's no rush, so I'm going to go and take a quick break, and I'll be back in a few minutes. Okay, I'm back. Managing fatigue is something I want to be very much better at this year than I was last year. Because last year it was essentially a case of the more learning I can cram in my head over any given day, week, month, the better. But now it is about performing. And I should only be trading when I'm ready to perform to my absolute best, just like if I was playing tennis. You need to, if I was trying to play 20 tennis matches a month, it wouldn't go very well. After the first few matches, I'd be getting burnt out, I'd be getting injuries, I'd be, getting shit in my head about my game. So I want to take more days off this year. And more importantly, maybe I want to shorten my trading sessions. So I want to get into a real habit of one good trade, bugger off. That's sort of what I want to become the standard. So I want most of my sessions, ideally, to be finishing around 9 a.m. because I don't want to burn myself out, especially early on in the year where there's a lot of pressure to pass this challenge, a lot of pressure trading so much more money than I've ever traded before. I want to be very careful, very, very careful. So I'm going to give it 10 minutes to see if the market wants to break to new all-time highs, in which case it would be insane for me not to be here and trade it. But beyond that, we would just see today as a job well done. And, let's say I had taken this trade this morning down here, which would have been potentially a very big trade. I would just stop. So, this morning, whenever I get like a £1,000 or £1,500 trade, that'll be me stopping every time. So the market's trying. We're coming back up again. All the volume is accumulating at the highs, which is a good, very good sign, because it means there's a lot of traders supporting this move. There's a lot of traders here in long positions wanting the market to go up. If the volume was more down here, then that would be a sign that there's not that much activity actually supporting this move. So this current present price action is the sort of price action that you want in order to signal potential continuation and potential uptrends. We're also close to a very round number in 24,800, and these act as key psychological levels. So the plan here is to see what happens around 800, see how strong the market looks, and then see what sort of retest we do or don't get. I've not got any tennis coaching in these next few days, at least with the snow. So it's going to allow me to spend a lot of time later in the day reviewing and watching, and which is sort of ideal. This is really the ideal week. This first week to have that extra bit of space and time is lovely, really. So here the market goes, trying to push above 800. Let's see what we can do. So what you'll notice is that the price is moving up, but we're not really getting any significant volume coming in. You know, the volume's here. This is where there's real support and protection. So this is really the science, if you like, behind is that the market breaks to a new price. It doesn't have the volume to sustain that price. We come down and retest the area where there is lots of volume. Loads more people get involved and then push the price higher. This is the actual mechanism behind why my breakout retest strategy actually works. Now, as we said earlier, you know, we might get a retest within a minute or two, or it might take half an hour, but you know, the probability of a retest is extremely high. Now, you may get the occasional morning where the momentum is just so strong that the market just never does, because there's just that much euphoria essentially backing an uptrend. But you know, those mornings are very few and far between. So it's not worth betting on those mornings happening, because more often than not, if you bet on it happening, it won't happen. Okay, we are perhaps now getting our retracement. So what we want to see is a test of this previous all-time high of around 24,777. I will not be even thinking about making any trades unless we can come down to that level, because buying any higher than that, I see a very high risk that we'd just be buying the highs of the morning. And as you can see from the 5-minute chart, we are yet to see much of a meaningful retracement. But if we do retrace back to this level, that would be a 50-point retracement, which would be a sizable retracement, and hopefully enough of a retracement to get plenty more buyers on board, me included. There's also a possibility that 800 could act as the support, but it's looking unlikely given the volume profile. Down here is where the buyers are. So once we do get down there, we'd need to see some very strong bullish follow through back to the upside. We don't just buy mechanically when we get down here, because there's a chance that we could just come all the way back down to the POC, or back all the way down to the value area low. So stage one of the setup is almost complete, because we've almost got this retracement back to the value area high. This area around the value area high, some traders call this the battle zone, because this is essentially the key level where there's buyers coming in to try and push the market higher, but there's sellers that want to send us back down. And that's why you can see a sudden influx of volatility and activity, because there's that heavy volume of transactions taking place. So we're now back to the all-time high. and we're back to the value area high. Now, there's no guarantee we're going to find buyers here and continue high. There's no guarantee, which is why we don't want to just mechanically enter the trade. But this is now where we're really keeping a close eye on what's going on. And if we do get some sort of clear bullish follow through, that's where we would then pull the trigger. So there's definitely some buyers coming in. The question is whether or not they're going to be strong enough. This is also the start of a new hourly candle as well, which just adds a little bit of extra, I guess you might say, nuance to this, or complication to this. So this battle zone has now formed. This area here is now our new area of interest, of who's going to win. Who's going to win? Are we going to be pushed back into here, or are we going to be moving back out and up? So what we want to see is some sort of bullish close above this small highlighted area. And if we get that, that would likely be our signal to buy. Okay, I am now long the DAX. Again, I'm not going to change screens, so apologies. I'll try and get that sorted for tomorrow. So what we're betting on now is that the market's going to test the high of the day. And again, this is never guaranteed, but this is a good setup. This is a very good setup. So if it does lose, we can, hold our head high, knowing that we followed our rules and did, a lot of stuff right. Okay, stop loss is now at break even. Unfortunately, it looks like we may be getting stopped out break even here. Yeah. Okay, we've been stopped out for break even, which is fine. Good risk management there. What I'd like to do is see where is my order history. I know it's on it somewhere. Okay, here it is. So what happened there is I entered on the close of this candle here, and then I moved stop loss to break even on the close of this candle here, because we came down and retested our entry and then moved higher. So once we moved here, I thought any further move down, I want to be out of the trade. So that is going to be us finished for this morning, because it now looks like we may be settling into some sort of trading range. So that is a good start. And tomorrow I will look to try the 3-screen setup and see if we can get that working. So thank you very much, and I will see you tomorrow.